Hello everyone, welcome to my channel. Today's topic is financial statement analysis. Statement analysis is a very important topic in financial management, in corporate accounting and accounting for managers. What is the outline in this? We will read about the financial statement and generally accepted accounting principle, that is GAAP, financial ratios, and how you standardize the financial statement, application, use. Important question. See, managers, shareholders, creditor, and other interested group seek answer the following important questions about a firm. Okay, what is the financial position of the firm at a given point of time? Because if I am an investor, shareholder, I should know about the financial position of the company time to time. Because I invested. How has the firm performed financially over a given period of time? And what have been the sources and use of cash over a period of time? These are the questions answer should be given by the finance manager. So for that, they are preparing a financial statement. So the accountant prepare the financial statement, and that is a balance sheet, profit and loss account, fund for cash flow. So these are the to give the answers the above question. So balance sheet we are using two format: horizontal format, vertical format. Vertical format we are using for the company, and the horizontal format is what your liability plus, that is accounting equation. Your liability plus equity equal to assets. So liability side means what? Your share capital, reserve and surplus, secure unsecured loan, current liability and provision. And in asset side, fixed asset, your investment, current asset, loan and advances, miscellaneous expenditure. Vertical format, it's a two-part: source of fund, application of fund. Source of fund means shareholder under the capital, reserve and surplus. Loan means secure and unsecured. And application means fixed asset, investment, current asset, and less your current liability and provision. So you will get your net current asset and miscellaneous expenditure and losses. Balance sheet, I took a company name like simply Tata Limited. So this is the data I prepared, like if 2 years data it is there for the accounting firm. In the 2020 and 2021, their share capital, reserve and surplus, fixed asset, investment, all that is given. So balance sheet is given like in this format also, source of fund and application of fund. So liabilities, share capital, reserve and surplus, secure and secure loan, liabilities, asset, fixed asset, investment, current asset. Why I previously also in one video I discussed about the financial statement analysis with one sum. So please refer that also. And this is with the other case. Key in this with the balance sheet, if you have, how you are able to find out all the ratios. And for that only, like this is a profit and loss account is also given, your income and expenditure. Please download this video and try to solve the sum based on that. So you will get a clear picture about financial statement analysis with one good example from the starting to ending. Profit and loss account of again Tata Limited, it is given here. Net sales for 2020 and 2021, your cost of goods sold, wages, whatever the operating cost, your PBT, profit before interest, EBIT, less interest, your EBT or PBT, less your tax, EAT. This is a proper income statement. And so profit and loss account items, what other things will come? Net sale, cost of goods sold, gross profit, operating profit, non-operating, gain, losses, interest, PBT, PAT. Okay. And net cash flow? Net cash flow is your profit after tax minus non-cash revenue plus cash expenses. So in a practice analyst, use the following appropriation: net cash flow, profit after tax plus depreciation plus amortization. Please write all the formula in your notebook. So statement of cash flow, sources of cash. So increase in liability or owner's equity, decrease in assets. And uses of cash is your decrease in liability opposite, and owner's equity, increase in assets other than cash. So this is very important: source of cash and uses of cash. Statement of cash flow: operating, investing and financing. So in operating, what? Cash flow from operation minus your cash outflow from operation. So you will get cash flow from operation. Investment means cash flow from investing activity minus cash flow outflow from investing activity. You will get cash flow from investing activity. And financing activity, again cash flow from financing minus outflow. So you will get from, so that you will prepare net cash flow from period. Then again what? Source and uses. Financing may capital increase, decrease. I made it very easy for you. So cash flow statement for the Tata, it is given cash flow from operating activity. See, if you will read this, in this you will get your full ratio analysis, cash flow with one proper data. So cash flow, if you will read the format, increase and decrease for your cash operating activity, financing activity. Okay, so you will get the proper idea. The cash flow from operating activity, ki net profit before tax and extraordinary item, adjustment whatever there is, then again before working capital charges, then adjustment is given, then cash generated from the operation, cash flow, extraordinary item, all is given. Then again investing activity, because investing means what? Purchase of fixed asset, whatever is there, and net cash flow. So up to minus. Then again cash flow from financing activity. Here only your corporate deposit, dividend paid, interest paid, all whatever the cash item related to the finance department, all will come in your financing activity. So if you will add increase in cash and cash equivalent is your ABC. So cash equivalent as in the starting period and ending period you have to write. So this is total about cash flow. Please solve this sum. Maintenance of the bottom line, key inflate the cell, how it will happen, how the extra provision is there, all that. Generally accept accounting gap, Indian gap and US gap is there, and IFRS is there, and key trend of accounting standard. Indian gap, in Indian gap is influenced by the following provision relating to the account in the Company Act, and special statutory and regulation is given, and SEBI regulation is also given. So ICAI endorsed by the government, so guidance note issued by the ICAI. Tata Limited profit and loss account, again it is given here, and again Tata Limited balance sheet is given. So here if you want to use a ratio, I have to take a data from here. If I want current ratio, here the ratio will start liquidity ratio, and at current, please refer my previous financial statement analysis PPT in my video, that name is financial statement analysis only. There you will get in detail about all formulas with solve sum. So liquidity ratio, so current ratio, current asset by current liability, you have to calculate here what are your current assets, and based on that you have to calculate. Okay, then asset test ratio or liquidity ratio is quick asset by current liability. Then cash ratio, cash and bank balance, and investment by current liability. Then leverage ratio is there, debt equity ratio, debt asset ratio. How? So you download this and solve one by one. So turnover ratio, inventory turnover, cost of goods sold by average inventory, debtors turnover, net cash sale by average debtors. Because in exam, what they will give you the proper balance sheet and profit and loss account. Based on that, they will ask you to find like liquidity ratio, inventory turnover ratio, fixed asset turnover ratio. So you should know net sales from your profit and loss account divided by average net fixed asset. From your balance sheet, you have to check that. So total asset turnover ratio, okay, net sale by total assets. Profitability ratio, gross profit ratio, net profit ratio, ROI is very important, return on asset. So this you will get again from the income statement, profit after tax by average total assets. Profitability ratio again, return on capital. This is very important, ROE. Because if you want to invest for any company, you should know what is the ROE of company, what is the ROE of company, ROCE of the company. So this is very important for MBA students. So return on capital employed is your profit before interest and tax, 1 minus tax rate by average total assets. And return on equity, whatever your equity earning by average equity. Valuation ratio, PE ratio. PE ratio, yield and market value to book value ratios are always, if you do the valuation, company valuation, corporate valuation, that time this valuation ratio is must. You should know about the company. Before investment in share market also, you should know what is the PE of the company. Okay, that is what MPS, market price per share by earning per share. Earning per share, how to calculate? Based on the income statement, I thought previous slide, if you see, it is there. So EPS is your whatever earning available to equity shareholder divided by your number of equity shares. So NPS, market price per share. So yield, what is that? Ki whatever the dividend by initial price, that is dividend yield, and the price change by initial price, that is capital gain, based on that. So market value to book value ratio means whatever the market value per share, market price per share by book value, original cost. So comparison of the industry average, these are the ratio. So this is the Tata Limited there in the industry average, because comparison we had done. So these all formula in the percentage we have to calculate. So time series again we have debt equity ratio, total asset, net profit. So we are able to complete the next point is very important, DuPont analysis. DuPont analysis basic is what was the formula? Net profit by average total asset equal to net profit by net sales, that is NPM into net sale by total average total assets. So extended due point may again it is there, ROE and NPM this is, and into this one, sales average total asset, that is TAR, TR, and this is the formula. So DuPont analysis is very important. You are able to see extended of DuPont analysis, how the return of equity and all the things we are calculating. Then again, this is the common size. Common size and common base year financial statement is given. So you can refer this. And what are the application of financial analysis? Financial analysis ratio why we are doing? To access the corporate excellence. Then again, bank property if it is there, value if you want to invest for the company, if you know the bond rating, what is the estimated market risk of the company. So problem in the financial statement is your realistic and intuitive character, development of benchmark, window dressing, price level changes, various accounting policies changes, interpretation of result, correlation among the ratios, and guideline. Use your ratio to get clue and ask the right questions. Be selective and know the more trick. So looking behind the number is, are the company revenue or one key customer? To what extent the company's revenue tied in with one product? What is the competition, future prospect, legal and regulation environment? So in the summary, what we have done, balance it horizontal and vertical column, profit and loss account, statement of cash flow are the three financial statements that I discussed and based on one example. So financial statement analysis can provide valuable insight into the firm's performance and position. So financial statement analysis is very important, and it is a principal tool of financial statement analysis, your financial ratio analysis. And in that liquidity ratio, profitability ratio, all that valuation ratio, that are the basic ratios. If you are very new also, if you see that liquidity ratio, leverage ratio, turnover ratio, you are able to compare one company to another company. And viewpoint analysis is also very famous financial tool to provide the insight in the deeper way about your ROE and ROCE. And certain problem is also there. So this is the last part. So please refer my PPT and try to solve this sum. And if any doubt, please write in the comment box. Thank you for watching my video.